You ready to go?
Yeah, I am.
Welcome back, stock fans. I am John Ransom, the Great and Powerful. This is Ransom Notes powered by townhallfinance.com and the Wall Street Business Network. Pleased, as always, to have David Williams from Williams Edge and PageTrader.com join us. And I got to tell you, David, I've been bragging on you a little bit in my column for correctly predicting the rally on Tuesday.
Well, thank you very much. I'm delighted that the market has the volatility and also that our clients, subscribers, and so on really were able to take advantage of this more than just being a forecast that ran to its numbers and so on. And it was a substantial one. We had a large number of people who follow our work actually trade this and pick up anywhere from 30 to 40 points in the S&P, which is a substantial gain, especially for people who might not be accustomed, to that type of trading size to pick up those kinds of swings.
Mm-hmm. Is this one of the you did a webinar earlier that I listened to where you had a certain principle where it really identified kind of big moves either way. Is this an example of that?
Yeah, what we did in this particular forecast is back last week, Wednesday and Thursday and Friday, we had indicated that if the S&P started to close, this is the futures market, started to close above $1,910, that the market would advance to $1,982, and it would touch that price on Wednesday, September 9th. Last week, the market did close every day from the point forward where we mentioned it above 1910, and today is September 9th, Wednesday, and the market rallied up and it completed the 1982 upside target, along with getting up to as high as 1992. But for our trading purposes, the completion of the trade was at 1980 to 1982, and that completed it. What makes this possible isn't witchcraft or magic. What makes it possible is that the market isn't random. That's what makes it possible. And if you believe the market is random, that's totally understandable. It took me, myself, many, many years to understand how the market isn't random, and we demonstrate that by putting these trades out for our clients who are very used to following these trades with the understanding that these are not guesses, nor are they hints or clues. We're actually following a very specific methodology based on the fact that the market has a nature. It isn't just a free-for-all where anything can happen. Although anything can happen, it doesn't make it random. So,
well, and more importantly, you are kind of willing to put your money where your mouth is. When people sign up for the free trial, they get a quite bit of information. I mean, this isn't like one or two trades they get over a period of 2 weeks. They get quite a few specific, very, very specific calls about the market on which to judge you.
They do, John, and I appreciate you bringing that up. The trial is for 2 weeks. If people want to go to PageTrader.com, they can sign up for a 2-week free trial. Call in and they'll put you into it. And in that 2-week period, at the very least, you're going to see about 20 individual trades in a wide variety of markets, market calls, forecasts for highly specific things to happen in the market. And it's that kind of specificity that allows people to go from perhaps struggling with the market to getting very specific things that are going to happen in the market and being able to trade them and really put this information to work. So I'm hoping. Yeah, go ahead.
And as you mentioned earlier, you know, the other day it was a 40-point move on the S&P 500. I want to emphasize for folks that that's the E-mini S&P 500 contract, and so you're using the power of leverage in order to make those 40 points work the most for you. I mean, that's quite a bit of money.
Yeah, that 40 points is worth $2,000 per contract to a person who stayed in the whole move. Interestingly enough, human psychology is the next barrier to being able to do this well. Once you have very high probability trades, you still are not out of the water yet. You still need to be able to execute those trades effectively and stay with the trades, you know, O ye of little faith. You know, once you've got 10 points of a 30 or 40 point move that we're forecasting, it's very tempting to take that off the table and say, hey, well, I made 10 points and that's more than I've ever made before. It really does take practice to put this together and use it in the way that it's actually intended. and be able to get the gains that are actually available to people. So that the final barrier is the human being himself, the human psychology that goes along with the methodology. So
Yeah, and as we pointed out yesterday, the financial markets, are primarily first and foremost behavioral markets, not
yes,
necessarily
great point.
financial markets.
Yeah, that's a great point. That's the best I've heard it said.
And especially on a trading basis, they become behavioral. And again, even in regular finance in your personal portfolio, lots of things are behavioral, guys. Guys, get all the information, however, that you need for the next market movement advance. Join David Williams and Williams Edge Page Trader, 888-231-4702, 888-231-4702, or you can look them up online at pagetrader.com. Get all the information that you need for the next market movement in advance. David, we will see you tomorrow. Thanks so much.
Thank you, John. Great show. See you then.
Yeah.
All right. Hey, good morning, everyone. Thank you for coming today. I hope that you enjoy what we're doing with John Ransom. We do, and you can check him out on the internet as well. Just type in John Ransom. Ransom Notes is the name of his program. He's got some other interesting people on his program as well. Hopefully not as interesting as us, but we're willing to let someone into the club if they are interesting. No, I'm just playing with you. So let's take a look. We have some very interesting things that have happened. The main one, of course, is this trade. I'll put it center stage here for the S&P. We do have a very interesting thing that has happened today. The market has broken well below some very important levels now, which gives us the possibility that the entire move is going to be taken back, which would mean, this is just a possibility yet, it's not a forecast that we've put out, but it would mean ultimately that the market could, I'm just drawing this in as a very rough thing, something like this. That's where it could end up, back down at 37 in a move in the way that they're doing this. But before we get to that, the beautiful thing is what we just covered, and I don't need to go over it again, but that this kind of move is, these larger moves happen all the time in the market. We don't catch every one of them, but the ones that we are able to make statements about in almost invariably work out to their numbers. There's an occasional time where they may not, there's some other force at work or that we didn't take into account or we're just not good enough to know about yet. But in the majority of the cases, they do run to their numbers, and it allows people like you and us and anyone else to take real advantage of these and to go from trading for scalps and ticks all the way up to trading literally better than a pro. Not like a pro, better. Because there's many pros that would not be able to necessarily know the information that you would know being in this program. And we have many, quote unquote pros, legitimate people that have been in the markets for 30 years. One of them is going to be talking here in a moment with us, and they're doing the best they can, and they've had their own success in the markets in their own way. But many of them will tell you after watching our product that this is new stuff. This is not stuff they've been able to do in the past. And this takes any person with a certain skill set and allows them to really supercharge what they're doing. And that's what the goal here is to take this very, very well-vetted information out and put it into your own trading and rely on it. Actually become a person who's relying on this information. You will not regret having done that. With me today, I also have Jerry Fagnant from Page Trader. He is a 30-year plus veteran of the mainly commodity markets, the S&P 500, the crude oil, and occasionally some other trades. Jerry, are you there?
Good afternoon, David. I am.
Well, good. I'm delighted to have you here with us today. And would you agree that every generation or so, or every, whatever that term means, whether it's 100 years or 50 years or 25 years, there's going to be some new improvements in the way that people view markets. I would hope there is anyway. And that you speak to many of our customers that people do recognize and are recognizing that the kinds of things that we're presenting and the kind of specificity that we're giving out to traders with the reliability and so on is new. It's not something they have seen before, perhaps nor had you before, 8 years ago. We hadn't developed it to this level at that point. But would you agree that we're perhaps in a new area now in the ability to forecast markets and therefore profit from these apparently random moves in the market.
Oh, absolutely, without a doubt. Your work is, is a new frontier, if you will, in the ability to read and understand and know where the market is going to go within a very specific price in a very specific period of time. And certainly in my 30 years of having been around very large, professional fund managers, analysts, hedge fund managers, you name it, all the way up to the CEOs and CIOs of major investment firms. There's nothing in my 30 years that has even come remotely close to being able to understand and predict where a market's going to be and when it's going to get there. The way that
if you keep saying that, you can be on this show every day. I just want just for the record, you can come on the show every day and say that.
Perfect.
I was lucky enough to see certain things over many, many years of looking at the market and studying it. And of course, you go through plateaus and you get to certain levels, and then you think you're never going to see anything further. There's no way you're going to get another insight. But if you stare at something long enough, you just might see that. And I think that happens to everybody on their own level, whatever that is. They see things one day that they didn't see the other day. We all perceive things in different ways. And ultimately, I was lucky enough to see certain things about the market and tie it together to some extent. I certainly can't claim to know anything except very small, specific periods of time that very likely certain things are going to happen. But we're going to leverage that for everything it's worth and continue to grow our understanding. And I think others, Jerry, along with us that are watching the work that we do and trading in this, are getting an education. One way or the other, they're getting an education because this is turning them from perhaps 20 and 30 point losing trader to a 20 and 30 point gaining trader, something like that. So let's see. I don't know. I also want to check and see if we have some questions here, Jerry, as well, and maybe we may have some. So let me open these up.
Absolutely.
Ray is with us today. He says, David, thanks for this program. Anything on SBUX? It's unfortunate these are not symbols. The future symbols are not standardized across platforms, and I don't know what CAT or SBUX is, Ray, and I apologize. Hamilton's with us here, and he says, thank you, David. Excellent presentation on market calls. Thank you very much, Hamilton. I'm looking forward to seeing you soon. We'll have a great time when I do, and you better be ready because it's going to be fun. And let's see, no other questions here today, but I do want to invite anyone who is interested in taking a trial or taking a look at the trades to take a trial and check out what we're doing and see if it fits into what you're trying to do. I can almost guarantee you that if you take what we're doing seriously and take your own work seriously, you'll find a way to merge these two serious bodies of work, yours and ours, into a much higher level of actual execution in your trading. The final frontier is psychology, the ability to actually do what you know you're supposed to do, and that is left, in your own mind, and we'll help you with that as best as we can. But one of the things I would say about the psychological side of trading is that most of us cause ourselves too much grief by worrying and obsessing about money. And so if you can unwind the money obsession and get more interested in the markets themselves and the probability factor and trade from a much more relaxed viewpoint, the money becomes a very happy side effect of doing the right thing and having your focus on the right thing, which isn't supposed to be making money. It's supposed to be being in the market when the probabilities are in your favor. Everyone's made a great mistake thinking that it's supposed to be about money. Ultimately, in the end, it will be about money, but to get to that point, you have to go through this other doorway, which is saying you have to be in the market when the probabilities are most in your favor. And if you can keep your eye on that ball, then the making money, it does appear, it will show up for you, but it won't show up because you're chasing it like a woman. It'll show up because your attention is on the right thing, which is making sure that you have something very highly likely about to happen in the market. We help you with that, and that you tie that in with your own understanding of what markets might do. And in some cases, we certainly might forecast something that you may not in your heart of hearts think is going to happen, and that you may have to struggle with that because sometimes that is going to be the case. But when that isn't the case, when you actually have your work and our work aligning, you have every reason to be in that trade, and it won't be for a few ticks. That's one of the nice things. You don't want to get stuck in the scalping and that whole thing. That's just done because the people promoting those systems don't know anything more about the market. They're trying to take the least possible amount of money from the market because they can't understand the movement beyond a few ticks. That's different in our case because of study and because of the work we've done, and you should take advantage of that. We certainly want you to, and I think you'll find over time, if you take a trial, perhaps even pick up a subscription, you'll find that this is something that will merge very nicely with your own level, as long as you're not just an absolute beginner in the markets. This work is not really for them at this point. But once you get past that beginner stage, I think you'll find something very valuable in the market work that we're doing. We hope you do. Jerry, do you have any final thoughts on anything about today and so on?
No, I think, as we said earlier, I think the break of 66 is
it's ugly.
It's quite interesting.
Yeah.
And I mean, this is, I know that we don't have anything specific necessarily in this area, but I think it is for me and my the things that I look at in conjunction with, of course, your work. I think it's important. This is an important area that if they're going to hold, they're going to hold maybe here. If not, then they could, like you said, we're looking at taking the whole darn move back. Yeah,
I think the danger right now is that, and not danger in the sense that I think a better word may be that the real possibility is that if we start seeing much degradation below these levels, especially below 1950, it's probably going to run the entire thing and take it all back and go down to 37. Or lower. So that's big.
Yeah, this area that they just tested, oddly enough, we had traded up to yesterday, as you might recall, traded up to this 54 level, and then when they firmed up on the 54, obviously they advanced nicely. So maybe this is just a bit of a surprising pullback all the way to test that 54, 55 area. We'll have to kind of stand aside and watch and let them show us what they want to do and then act accordingly.
Yeah, one final thing I want to tell everyone is that I'm going to write something that will show you how you can absolutely always lose in the market. And why would you want to know how you can always lose in the market? The reason you would want to know that is so you can stop doing those things. Stop doing the things that are so obvious as causes for people to lose. One of them is focusing on money. One of them is being worried that the market's moving and that you're not in it, and therefore you make a rash decision about getting in and you have no real reason to be in other than you just don't want to miss out. That's a big one for people. Not using stops is the sign of a rank loser in the market, and so on. If you know all the things that you shouldn't be doing and you stop doing those things, you're actually in a much better position than somebody who even might know something really valuable but still does those other losing traits. You have to be rid of the losing traits to have the good stuff have a chance to make you get ahead in this. You can't have both. You can't have a person could have all the methods that anyone who's successful, including ourselves, are using and still hack himself to pieces if he still has all the losing traits as well. You can't succeed with all the losing traits and all the winning traits. The losing traits will always win out over the winning traits. Winning traits are more fragile. The losing traits are much more robust. You know, I have a saying and I know we're going on a little long here, but I have a principle that I call the resiliency of worthlessness. And the resiliency of worthlessness is why weeds can grow in your yard and you can literally put a flamethrower on them and they still come back the next day growing. They're worthless, but they're very resilient. It's why a drunk driver, can run into a family of 4 in an intersection and kill all 4 people in the car who have, you know, everything going for them. They're doing everything right in life, but the drunk gets out of the truck, wipes himself off, and gets himself a beer. That's the resiliency of worthlessness principle at work. The worthless is quite resilient, and the worthwhile is fragile. So in the same way, when you come to the markets, the winning traits are more fragile than the losing traits. So that's why you can't have both. You can't have a whole bunch of losing traits and a whole bunch of winning traits and expect to get ahead. You have to actually eliminate the losing traits. You have to get rid of the resiliency of worthlessness, because those traits are resilient, aren't they? And check out your own life and see how true that is, that the worthless tends to be resilient. It tends to stay around. It sticks. And so we have to work to get rid of those so that what winning qualities we do actually have, being more fragile than the losing qualities, can actually shine for us. That's the difference between a winner and a loser. The winner has actually eliminated the majority, if not all, of those bad traits, and he's not subject to the resiliency of worthlessness at that point, and his trading takes on a whole new thing. You can have all the great information in the world, but if you still have those losing traits, you're still going to be in trouble. So keep that in mind. Think about these ideas. You will be different than others in that way, and you'll find that by eliminating the bad qualities, you're automatically more intelligent because you're not being compelled to do the bad. And by just eliminating the bad things, you're doing everything you need to do in order to get things to be better. It's like opening a window in your house. You don't cause the wind to blow, you don't cause the sun to shine, but unless you open that window, you're not going to have a breeze in your house. So whenever it's going to blow, you're going to need the window open. So that's your job. Your job in this case is the window opening is to get rid of the bad traits and start trading only when the probabilities are in your favor. If you can get that done and use a protective stop and some of the other things we talked about, you're eliminating those worthless traits which are so resilient, and you're going to do much, much better just based on that alone. And then the good stuff that you already have developed, possibly in concert with what we're going to give you, will really have a wonderful chance of changing your trading, reversing the trend in your trading if it needs to be reversed. And you'll find yourself, like many of our clients today, blinking in disbelief that they have 30 points of winning where they're normally used to holding on to 30 and 40-point losers. It's because they're having help from Jerry, and it's because they're blending this in with their own system, and they're getting rid of the resilient but worthless traits that are in their trading. So listen, I want to thank you for coming today. Jerry, thank you as well. We'll be back tomorrow with the John Ransom program. We're on every day with him. Check us out. We'll see you tomorrow. Have a wonderful afternoon. See you then.